Hello everyone, right now is February 23rd, 2019 here in New York City. So in this video, we're going to talk about SPY, the S&P 500 ETF, and also QQQ, that's the NASDAQ ETF, analyzing these two ETFs using my proprietary Pendragon 321 analytical system. Pendragon 321, very simple. 3 stands for 3 lines, 2 sets of trading signals, and 1 proprietary and 1 indicator. So right now we are looking at SPY daily chart. Right away you'll notice that the market has risen above the 200-day moving average, which is the yellow line right there, and it hovered there pretty much for the entire week. It left a slight gap, and what's interesting is that unlike the past, where we have let me label right here for you. Point A, right here. Point B, and point C. And like in the past, last year, the market did not immediately drop after that. You'll also note that in the past, we do have these trend GPS short sell signal in B and C. But this time, we don't have those signals yet. In fact, if you look at it, it was the beginning of uptrend denoted by this blue cross. So what's happening here, the much anticipated, a lot of people were waiting to short this market or have already shorted it and expecting the market to go down once it penetrate the above the 200-day moving average. They were looking for a repeat of last year, point A, B, C here. At least last week it did not happen. Okay, so that's what most people are looking at. So let's see what we can gain and further insight from the Pendragon 321. So again, very easy. Daily chart on the left, weekly chart in the middle, monthly chart on the right. So as mentioned before, already we are currently still going through, working through the long signal right here. This blue dot right here. So it's continuing to go higher. Okay, everybody see that? Okay, continue to go higher. So that's the influence we're under. And also notice that there are no more lines on top here. There are no more possible resistance here. Only the weekly, now we look at the middle chart here now. The weekly chart has a pink cross denoting the beginning of a downtrend. But we are waiting for 4 weeks now. With the end of last Friday, we're waiting for a possible sell signal because Trend GPS give us these yellow dot. Every time this yellow dot appear, that's an alert. Okay, it's an alert for possible short trade, and it hasn't happened yet. Now, if next week only, okay, the price drop below 276.4. So if next week only, SPY drop below 27634, then it will trigger a short trade on the weekly chart. And okay, so now you look at daily chart. Yeah, we have a beginning of a uptrend by the blue cross. There's no signal yet. So here's an interesting here now. So while on the monthly chart, we are actually holding onto a long position. Okay. And we're looking on the weekly chart here, looking at a possible short position. Now, let's say the short position was triggered. Okay, so now we have, on the longest time frame, on the monthly chart, we have a long position. On the medium-term chart, which is weekly chart, we have a short position. Those two are not inherently contradictory. Why? Because you have different time frame. So theoretically, both the long and the shorts can both make money. Okay, it's just that you have different timing and you look at different price, possible support resistance points, the pressure points denoted by these 3 power lines. So quick review again: green line short term, pink one medium term, and purple one long term. So if right now let's say we got shorted, okay, next week the market started going down, where is the first possible support going to be? If you're looking at a weekly chart right here, 268.75, that's a very, that's a possible number. Okay, but that's the where the green and the purple line merge. Okay, and on the right hand side here, the monthly chart is 261.01. Okay, so don't forget now, we are looking at weekly chart and monthly chart. Those two numbers are fairly close. They only off by 0.74. So they might as well be the same number. So if on a longer time frame, 268.75 to 268, that is possible strong support. But if you look at daily chart, we have another higher number coming up. That's 271.84. Okay, so if indeed there's a short trade happened, these two numbers, 271.84, 268.75 to 268-ish, those two levels are going to be first possible support level. Okay, and also might be your first possible scaling out or profit taking level, depends on how the market react over there. And the number, and then the next level down, it's about 266.82 on the daily chart, or 267.11 on the purple. Those two numbers are fairly close. Everybody see that? So that's telling us that there could be a possible strong support there again. Okay, that's the next number. Okay, and on the weekly chart, we have 261.55. Okay, 261.55. Let me make that pink to be consistent with the color lines here. That's what the purple line gave us on the weekly chart. And on the right hand side, the pink one is 259.63. That's the purple line. And finally, we have 230.58. So these are the number to watch out for if the market were to come going down. Okay, these are the possible support levels, and depends on how the markets react there, it could determine whether we bounce back up from there or we continue down. So in other words, as I mentioned in a previous video, right now the dynamic of the market has changed. Whereas in the end of last year, you know, starting around October-ish, the market was rather weak. They sliced through all this support rather easily and quickly. But now here, you know, like back here, let me bring back that chart. See, like back then, they slide through all this support rather easily, quickly. Okay, that's from using a 200-day moving average. If we go back to the okay, we're looking at daily chart here, right? We'll just put a circle so we're comparing, so it's easy for everybody to see apple with apple. See, because there were no support line in my previous video, I mentioned there's no support line down there, in normal power lines down there, so that's why the market dropped rather nicely. This time, however, the rise is quite interesting because it's been relatively smooth and with very low volatility. So everyone is expecting the market to retrace because nothing really goes up forever. Okay, well, ultimately the market is going to tell us what it wants to do. But in the meantime, we are now prepared now. Okay, with all these three different price levels. Actually, well, with these few price levels that we have right here. So if the market was to go down, those are the numbers you want to watch out for, the ones I label, because it depends on what the market react. It could either be just go slight resumption of another downtrend, or it could be a level which bounce up. Because frankly, on the monthly chart right here, if you look at the monthly chart, even though all that drop happened late last year, it looks like a temporary retracement. It's not really cause for concern yet, because in my other previous video, I mentioned that if this is to be truly a bear market, the market must drop convincingly below the purple line right here. In other words, as of today, the reading's at 230.58. So in order for this to be a convincing and strong bear market, the market must drop below 230.58. 230.58. That is the number, the very strong number we're looking for. So unlike looking at the 200-day moving average, if this was to be a real bear market, that is the number I will be looking at, I'll be watch out for. Okay, but just quickly go back, show everybody why it is, because now we're looking at the OA. Okay, let me blow up the chart a little bit. It's easier for those of you who are using the cell phone to see it. Okay, let me bring this back. Hold up. Okay. So quick review. Right now we are looking at this 2008, the previous bear market. Remember, we noticed that I mentioned that it had to drop below the purple line significantly. and all three lines turned down. This is on the monthly chart now. Then we go back to the bear market. Right now this is on SPY. Let's go to S&P index so we have more data. Okay, so let's go look at 2000. Again, right here, back in 2000, we had to drop below the purple line for a significant bear market to develop. Okay, and also all the three moving averages on the monthly chart now, on the monthly chart, must turn down. Okay, this is you know, a long affair. It's not like a 1 or 2 day or even a 1 or 2 week or month kind of thing. If you're talking about a true bear market, like the one that we have in 2000 and 2008. So right now, look at this. All the moving averages, well, not moving averages, all the three lines are pretty strong up there. Okay, so we just don't see that yet. So it's looking now more likely, more increasingly likely that this is really just a temporary pullback. Okay, of still a strong uptrend rather than the beginning of a nasty bear. That's something we have to keep in mind. And again, I mentioned before, there's no more power line up there, so there's no more significant resistance up here. Okay, and if we look at on the weekly chart and on the daily chart, same thing. There were really nothing up there anymore. Okay, so right now we are really looking for I'm expecting maybe some type of consolidation happening. Okay, and after that, if the market is truly strong, we might even expect another melt up. I know logically, emotionally, it's really hard to take because we know there are a lot of bad news out there in the world. Okay, the Eurozone is not doing quite well. Japanese economy is slowing down. China is not doing quite well. Even the US, we are pretty long on the expansion cycle now. And this bull market is one for the history books. So all the indicators are telling us that this probably cannot possibly go on. But at the end of the day, we have to listen to markets because there are always two sides to a trade. For every bull, there's a bear. For every time you bought a piece of stock, a share of stock, somebody sold it to you. By definition, when you long a stock, when you bought a stock, you're expecting stock to go up, right? So, but when you bought it, somebody sold it to you. The person who sold it to you are looking for the stocks to go down. So what you got to do is ask yourself, what is it that person who take the opposite side of the trade from you, what is it that this person know that you do not know? Okay, because realize if there are no in terms of shares now, okay, if there are no equal number of buyer and sellers, the transaction could not take place. So if I bought a stock at $100, 100 shares at $100, that means somebody sold that 100 shares to me at $100. So to me, if I bought it at $100, obviously I'm expecting the price to go above $100. Otherwise, why am I buying it? Because if I long at 100, the only way I can make money is for the price to risen above 100, right? On the same token, the person who sold it to me is thinking that the price could not possibly go above 100 anymore. So for that reason, okay, I have to be asking myself, what is it that I am missing? Why is it that I don't know that this person knows? Okay, so you must constantly keep that in the back of your mind. Okay, so that is a much better way, a more cautious way to profitability in the markets than having the blind faith in your analytical prowess or whatever you have, thinking that the market definitely have to go this and that. There is no such thing as 100% certainty in the markets. Never did and never will. Mark my words. Okay, that is one of the most important realization and lessons you can take away from trading or from investing. Okay, there's nothing absolute in the markets. Nothing. Okay, so now let's go to QQQ. So QQQ, the general pattern is very similar to what we saw in SPY. Okay, all the logic stands because they're similar. You guys will see we had this monthly long signal, and right now we're enjoying it. Only thing different is that are the levels. So I'm going to update the levels for you guys, so that way you can use it in your own trading. Again, this is not trading advice. I'm just sharing what the analytical system tell me. So on the weekly chart, 170.70. If the market next week only drop below 170.70 on a QQQ, that would trigger a short signal. Okay, 170.70, and the possible support levels, or the possible levels coming according to the lines, 160.73 on the monthly chart. That's the pink line over here. You guys see there's a 167.24 on top, and 155.43 on the pink line on the monthly chart. These are all the numbers you need to look out for if the market reversed, because these are the level that it has to clear before you can actually have a nice clean trend going down. Okay, so on the weekly chart, I'm just quickly update these numbers for you. Okay. All right, finally, let's put this number over here. So there you go. These are the numbers, possible support numbers for QQQ. That's the numbers to look for. Obviously, if you look at daily chart, the data is being updated with each bar. So right now, I'm doing these videos once a week, but the weekly chart and the monthly chart don't update as fast, so those numbers are probably have more longevity. Okay, so this concludes this video, and I will see you guys in the next one. Thank you for watching. Oh, by the way, if you're new to this channel and haven't subscribed already, please consider subscribing. Also, in the comment section, let me know what you think of the video, or what other instrument you would like me to analyze for you guys. All right, take care. Until next time. Bye-bye.